and welcome to the Mindful Money webcast. I'm John Lappin, editor of Mindful Money. We know that nothing lasts forever, but the news that Neil Woodford, star fund manager at Invesco Perpetual, is quitting the firm next April has shocked even veteran investors. Hargreaves Lansdown has been one of those firms that's been telling investors that they don't need to rush to switch out of these funds. Today we're talking to senior investment manager at Hargreaves Lansdown, Adrian Lowcock, to ask him about why they've sent that message out to the market. So can you give me the rationale that you have for telling investors that they don't need to switch very quickly, at least? There's not an immediate decision facing them.
Yes, of course, absolutely. And as you pointed out, it's the point you don't need to do it very quickly. First key point is Neil Woodford is going to be running those funds until April 2014, so he's going to be managing the money for another 6 months. Secondly, once he leaves, Mark Barnett will take over. Mark Barnett is a very experienced manager, 17 years of experience at Invesco Perpetual and 17 years of working alongside Neil Woodford as well. Thirdly, a lot of investors will probably want to follow Neil Woodford. He's setting up a new fund management group. Whether or not he sets up an equity income fund, we'll find out in time. But if investors do want to follow him and do want to wait to see, no better place to wait than in the existing fund. So at the moment, there's no reason to actually move out of the fund that I can see.
So if I was an investor and I had quite a big amount of my portfolio invested in those funds or in one of those funds, would that slightly change the calculation, do you think?
I think you've always got to be careful about having too much money in any one individual fund. So if you look at your portfolio on an individual basis and you think you've got a bit too much exposure to the Neil Woodford funds, then you should consider reducing that. To be honest, you should do that whether it announces resignation or not. It's a case of just having a well-diversified portfolio, probably no more than around 10% in any one fund.
And is there a time when investors should consider moving? Or should they be placing their faith in the new manager, Mark Barnett?
At the moment, I mean, we like Mark Barnett, so at the moment we think keep the fund, keep hold of the fund with Woodford. We'll meet the managers, Woodford, when he sets up his new fund, if it's suitable for retail investors, and Mark Barnett on an ongoing basis. But given his experience, and very experienced manager, 17 years at Invesco Perpetual, working alongside Neil Woodford, and a very, very good track record across a number of funds, investment trusts and unit trusts, we've got no reason to not support him at the moment.
What about if people said that because he's managing a reasonably large fund, but still much smaller than the two big funds, does that become an issue and a factor to think about?
Yeah, I mean, there's a lot of factors that come up to taking the two high income and income funds. I mean, he's taking up the sort of lead role in the UK fund management industry, so there's a lot of pressure from attention being put on there, and running funds of that size brings different challenges. So that's what we don't know at the moment. Can he step up to the plate and do that? It's going to be a tough gig. It's going to be a difficult challenge for him to do it. But his track record to date looks very strong, very impressive. So we think we want to give him time to look at to see how this performance, and only time will tell if he's able to deliver.
And is it a slightly different calculation if I was, say, and this is one way to describe it, say I'm mainly an ISA investor, or say I'm a pension investor, and they might have a slightly longer term horizon. They're looking at how they're invested in these funds now. Do they make slightly different calculations in terms of when they might or might not make a decision?
I don't think it makes much difference, actually, because what we're talking about here are sort of two aspects. You've got the short-term decision, and the potential long-term effect that has on the portfolio. So, given it's a 6-month period where Woodford's still running the funds, and he's working alongside Mark Barnett in a handover period, we think that stick with that. In the short term, that's not going to have any significant impact. Woodford's fund's still going to be run in very much the same style he's run funds in the past. Barnett is a similar style manager. What you then do is you have to sort of review your funds periodically. So I wouldn't change it just if you're in an ISA or a SIP. I would just look at it on the longer term goals anyway, and focus on the manager, and look at Woodford, stick with Woodford for the time being, and we'll see how Mark Barnett does over the medium and longer term.
There is obviously a lot of talk about what alternative funds may be appropriate. So what do you think are the main alternatives?
Well, the number one alternative that's come up in a lot of people's books at the moment is Artemis Income. It's a similar sort of large cap fund. It's about £6 billion in size, so it's pretty large as well. It's run by Adrian Frost and Adrian Gosden, very experienced managers, very capable managers, and it's a very good replacement. There are alternatives that have come up as well, so you've got things like Rathbone Income, run by Carl Stick. It's a slightly smaller fund in size, so it has perhaps a little bit more capacity to take on some of the money should people want to either switch new investments to another fund or switch out of Woodford. Those two funds are probably quite core, but you've got other choices as well, and you can sort of hunt around. You can go globally for income, you can go into the small and mid cap range, so there's quite a range of choice of equity income at the moment.
So what, in terms of that range of funds, some people may wish to switch like for like, so if they can, or within reason like for like. Some people might be prepared to look for something different. Now, in these lists, these are different types of funds.
Yeah, I think what you've got to do is, there's no sort of direct replacement for Woodford. There are people who have similar styles and similar approaches to it and take a long-term view on it, but managers have their own unique style. So when you're looking for alternative options, you need to really consider, does it do a similar thing? Is it predominantly in the sort of large cap space, which Woodford's fund is, partly because of the size? Do they take a sort of high conviction, perhaps not contrarian view, but sort of high conviction view on certain sectors which may be out of favour with the market? Or is it a small cap fund that perhaps is a bit more risky? It doesn't pay as high yield, but it's looking to grow that dividend over time? Or even, does it go overseas? Does it invest heavily overseas, or is it a purely global equity income fund? And you need to make sure that not only is that fund suitable for you, but does it meet your objectives for income and risk, because some of these funds can be riskier than others.
Okay, so quite a lot for investors to think about, but for the moment you say they have some time to consider their options.
Yeah, absolutely. I think we've got to keep this in perspective. It was a bit of a shocking news when it came out, but he will still be at the firm till April next year, and the incoming manager is a very skilled and experienced manager as well.
Thank you, Adrian, for talking to Mindful Money today.
Thank you.